Well, welcome to the International Sports Convention Virtual Week. Really pleased to welcome Benjamin Penkert, founder of Sports Tech X, presentation, developments in the sports tech market. Benjamin is really one of the global experts in the industry in this sector. Benjamin, welcome, and over to you.
Thank you, Nigel. Good to be here. And it's going to be hopefully some interesting minutes about, as you said, the developments in the sports tech market. So we're going to have a look at a lot of data, a lot of numbers today, because as we think at Sports Tech X, it's important to have a look at the numbers to get a feeling for what's happening in the market, because typically the numbers speak the truth. Just one thing before we start, to let you know why I hope to be capable of talking about these kind of numbers. For 3.5 years, we at Sports Tech X are publishing, as we hope, interesting insights. We publish reports, we have a newsletter, we have a blog, we have a podcast, we have a LinkedIn group, and all dealing with the beautiful startups and innovation in the sports tech space. And yes, we also need to make some money. So we have some services like a database, we do market analysis, and we help companies to promote themselves in the market. That's where we think that we are capable of talking about what is happening in the global sports tech market. And the following presentation will be based on a report that we recently published. It is called the Global Sports Tech VC Report 2020. We're going to see lots of slides with visuals, with data, and I'm going to walk you through some different chapters. Just one thing before we start, you don't have to make weird, awkward, low resolution screenshots during the presentation. You can download the report on our website. So what are we going to talk about today? Essentially, it's 3 main topics, as you can see here. And at the end, I'm going to present you some of the key takeaways out of the 3 topics. So we're going to talk about the world of sports tech from a geographical perspective. Then we're going to dive into which specific companies stand behind those numbers. And then we're going to look a bit on a few, as we think, interesting investment dynamics, which always help to understand what's happening in the market. So this is the menu of the day, 3-course meal with 1 extra, not surprise, but summary at the end. This is the agenda for today. For each chapter, by the way, I brought 5 slides. Just for key takeaways, it's only 1 slide. So to make sure that you know what you can expect from this session. Let's start, as said, with the world of sports tech from a geographical perspective. Over the last years, since 2015, in global sports tech, we have seen a total investment amount of $19.2 billion US. And as you can see on this chart, it shows how this $19.2 billion US is distributed over those 5 years. Plus, and this is this gray bluish line that you also see here, the amount of investment rounds that led to that investment. And underneath the chart, you see the average and median ticket sizes for each of those years. And here, and I'm going to do this on every slide, here are a few observations from us, or the key observations. There's usually a lot more on those slides, but this is how I want to take it now. So first of all, in case you didn't know, there was a global pandemic this year, right? Just in case that is news for you, right? So the big question was, so how would 2020 actually turn out from an investment perspective? Lots of people were a bit insecure. We're wondering, hey, are we gonna get back to like the big numbers that we have seen in the years before? And the good news is the pandemic didn't do too much harm to sports tech investment. As of now, or the date when we looked at the investment numbers was the end of Q3, so end of September, we have seen $2.55 billion US going into sports tech. And if we do a prediction for the year end based on experiences that we made in the last years, we will end up around something like $3.73 billion US at the end of the year. And the good news is that this is more than in 2019 in a non-pandemic year. We believe this is really good news for the industry. Yes, it is not as good as 2016 and 2018 when we have seen some really big deals and lots of investments, but still, it's still good news for sports tech. That is the one observation. The other observation is that for the first time in this period, we were falling below 500 deals for that year. You can say, okay, that's a bit tricky. Investors don't really do many rounds anymore. But it also means, on the other hand, that both the average and also the median ticket size is on record high in 2020 in a pandemic year. We think that is incredible. So we like to think or think about it in a different way. We say, hey, actually investors get more mature, more professional, more aware of what they're actually investing in, and they rather write the big checks than maybe lots of small doing lots of small investments. This is for us the main outcomes out of this slide. Second slide. We also want to know where the money is coming from. Like I said, we were looking at sports tech investment in this chapter from a geographical perspective. As you can see, clear leader, not so surprising, is North America. So out of these 19.2 billion US dollar, 10 billion are from North America, which is above 50%. Then ranked number 2, we have Asia with exactly 1/3 of the investment over the last years coming from there. And we here at Europe, unfortunately, only contribute with 12%, with 2.3 billion to the overall investment since 2015. That is one thing to highlight. The other one is, again, having a look at the rounds, the investment rounds. North America, unsurprisingly, has the most investment rounds, but then it gets interesting with both Asia and Europe. First of all, Asia, you don't see a lot of rounds there, 469 as we counted. And this is interesting in two directions. First of all, it is harder to research Asia. That is a given, right? It's a bit of a black box, so you have to put in a lot of effort to find those deals. So there is always a chance that we miss some of, especially the small deals. But what it definitely shows for Asia, if you look a bit below the bars, Asian investors, if they write checks, they write really big checks. I mean, average ticket size over the last year since 2015 is 19.2 million US dollar. That is amazing, and it's unparalleled in that ecosystem. Secondly, like I said, it's also worth looking at Europe. And you see in Europe, we have lots of investment rounds, 1,200 investment rounds. But the average and median ticket size is comparably low. So it seems there is a tendency in Europe to invest in early stage companies, but there is not so much follow-on investment happening. So basically contrary to what Asian investors are doing. These are the main outcomes for this slide from us. And if you put that on a timeline, so if we look at the development and the contribution of each region over the last year since 2015, that also paints an interesting picture. I'm not going to spend too much time on this slide, by the way, just one or two things that I want to highlight. So first of all, you can see that rest of the world, which for us is, it's a bit of a tricky, let's say, box or portfolio, but it's South America, it's Africa, and it's Australia, New Zealand, because they have not been contributing much to global sports tech, as you can see. They're typically around 0. something percentage, and only in 2019 they had one really big investment round in Brazil, in Gympass, which brought them to 10%. But basically, as of now, rest of the world doesn't play so much of a role in global sports tech. The other three regions, the one that we just mentioned, North America, Asia, and Europe, they show an interesting development, especially in 2020 in a pandemic year. Let's start with North America. So it's the darkest green bar in the chart. So North America, and especially the US, we're gonna get to that in a second, their contribution to global sports tech was actually going down over the last couple of years. So we have over 60% in 2017. Then in 2018, it was, the number is actually not correct on the slide, it's not 72, it's a bit higher, so 45-ish or something. And in 2019, it was only 42%. So we were like, okay, maybe there's a shift happening, and the other regions are getting stronger. But in a year of insecurity of a global pandemic in 2020, North America was able to strike back, or in that insecurity, investors were like, okay, here are the big checks. We're gonna go into the market and see what can happen there. So maybe they have made some really good, interesting deals that were maybe even on a discount in the pandemic year. On the other hand, Asia's contribution went down, actually the lowest amount since 2015. So the risk tolerance of Asian investors seems to be a bit lower than from North America. And Europe, after coming from a record year in 2019, went back to the average 10–11% that we have seen over the last couple of years. This is this slide. Speaking about, so as you can see, we're coming from total sports tech to continents to countries now, and you can guess what comes on the next slide. So these are the top countries in sports tech by funding since 2015, and on the lower right you see the table which only shows 2020, because we think that is also interesting to highlight. First of all, so far we said North America is really strong, which is still true, obviously, but this slide shows that from North America, it's basically only the US who are contributing to these numbers. It's actually 97% of the investment in sports tech in North America comes from the United States. And on rank number 8, there's also some Canadian contribution, but that is basically it. The other interesting observation is, if we move a bit more to Europe, that 50% of the top 10 countries in sports tech by funding are coming from Europe. The highest ranked country is the UK with on position number 4, and the rest of the countries are a bit lower, and especially Romania only had one big investment round, but still 50% of the top countries in sports tech are from Europe. Coming to Asia, we see China and India as two of the two countries in the top 3 globally, and especially India, if you look at the top 5 countries of 2020, had a really strong year. So overall, I mean, the US is leading with 10 billion in investment. Then it's China with 5 billion. But on rank number 3, and also thanks to a really strong year 2020 with 450 million US dollar in investment, India is about to break into that 1 billion plus dollar club as well. So if we look at these numbers, and especially last year, we have a tendency that India is establishing itself really as a top 3 player, and we're going to look at why that is in a few minutes. So yeah, the North America is dominant. Europe has a lot of contribution to the top 10 by the amount of countries, not so much in the overall numbers. And Asia has a really strong second player besides China, with India breaking into that $1 billion club. And then there's Brazil, the only contributor from the rest of the world, but that is basically based on just one company, Gympass, collecting a lot of investment. All right, this was the country perspective. Talking about the cities. Not surprisingly, we see the US and also China represented heavily. So out of the top 15, there are 7 cities from the US, and there are 4 from China. So there's only 4 cities that are not from these 2 countries. And 8 of the top 10 cities globally by funding in sports tech are not from China or from the US, with Bangalore on position number 9 and London on position number 10. So the first 8 countries on that 8 cities on that list are from the US and China. The global leader by far is New York City. You can see more than twice as much as second ranked Beijing. And interestingly, while the US cities are spread all over the top 15, the Chinese cities are only sitting in the top 7. So we're going to see, we found again what we have said before, that if Chinese investors invest, they invest heavily and also very selective. So that is also represented in this chart. Interesting though is, if you look at the little table on the upper right, is that in the top 5 cities of 2020, we don't see any Chinese flag. So the top 5 2020 is only US and is only India. And we're gonna get to the reasons why it is India this year in a few minutes. But we found this really interesting about this year, that India is so much emerging as a sports tech leading hub or country. So these are the top 15 cities in sports tech by funding amount. This is the end of chapter number 1. So we had a look on sports tech from a geographical perspective, and we were outlining where the investments were coming from, both on a continent or on a continental level, on a country level, and also on a city level. But another important question to ask is, which are actually the companies standing behind this? And with the companies also comes the themes. So are these companies in fitness or esports or content or whatever? And this is why we dive into those, as we call them, outstanding companies in the second chapter. This is one of my favorite slides for this year, I have to say. It's a new one in the report. So what we did also to kind of grasp what the effect of COVID is on the investment landscape, we put the investment in 2020 on a timeline so that we could see what was the investment in which month, and we did so until the end of October. And then we also took the top 10 deals of 2020 and looked at when they were made and what was the underlying theme behind it. As you can see, for example, let's go with the top investment this year. There's Swift in September. They collected 450 million US. They are from the US and they are in the fitness sector, or they serve the fitness industry. So we think this is a very interesting way to look at the year. And here are a few observations. First of all, before COVID was such a big topic, we had a really strong January, and we were here at Sports Tech X, we were really enthusiastic. We were like, okay, this is a really strong start into the year, over 500 million US of investment. This is going to be a record-breaking year. That was our expectation. And then you can see COVID happened, or COVID went, let's say, a bit more mainstream or spread over the globe. And investment numbers went really down. I mean, February was low, and over the next couple of months, it didn't get much better. There were some investments here and there, but nothing really big. So it was more, let's say, a very average year. But then summer came, and at the end of summer, and people were a bit more comfortable maybe with the whole COVID situation. And this was also true for investors. And it seems like they have seen the opportunities that are coming in such a time or in such a phase as well. And yeah, then September came, and you see it here. September was insane. It was the best investment month in sports tech, I think since I think it was 2015 or so. It's like since a long time. So we had 1 month with over $1 billion US of investment in sports tech, which was incredible. And also October, the month after, was a really strong one with almost 500 million of investment. So a few observations here besides this very high level look. 6 out of the top 10 investments from 2020 happened in the month of September and October. This is really interesting, as we think. Then out of the top 10 investments, 9 were 100 million US dollar or above, which is, I think, 2 more than last year. Again, another sign that sports tech is in a good position and that investors believe in the overall topic. Speaking about topics, so what did investors invest in? And let's just look at September and October. If you look at the themes, it is fitness, fantasy sports, fitness, fantasy sports, fitness, fitness. I think we can see a pattern here, right? So the 2 Indian investments, both were into fantasy cricket. which not coincidental happened at the same time as the Indian Premier League started. So at the beginning of the season, there started a little fantasy sports battle for cricket in India. Seen big investments there in Dream 11 and also in Mobile Premier League. But the rest of the investment, it was all US based and all in fitness: Swift, Tonal, Icon Sports or iFit and Whoop. And this doesn't come as a surprise, right? I mean, with the pandemic, gyms closing, people still wanted to be active. So at-home fitness, connect fitness, that was the topic of the year. It was already a big topic last year, but as you can see this year, it basically exploded. And to look a bit before the pandemic, also there it was fitness with ClassPass, but you also seen an investment in Barstool Sports, which was a bit more content heavy, maybe lucky for them, maybe I don't know, during the pandemic maybe they would not have gotten that deal, but that's just me guessing here. And also looking forward, I mean, the question is, what are investors going to invest in? We believe it's fitness is going to continue to be a hot theme. There are going to be some follow-up investments for sure. There might be some IPOs happening down the road. But we also believe that there are some other fitness areas that have not been covered yet, where we see some indicators. For example, in high performance lifestyle, in the business of recovery, we see interesting things happening with HyperEye, probably going to be a unicorn soon. And also the rise of the fitness creator. So like the influencers in the fitness industry, giving courses, giving classes. We believe there's still a lot of potential down the road. Now I spent a lot of time on this slide because I really like it, but this one is also an interesting one. This is showcasing the unicorns in global sports tech, and just a few comments on that. We have 19 as of now, as when we did the analysis, and 17 out of the 19 are actually B2C companies, which is a clear sign, right? So 17 out of 19 are B2C companies. And the other two are technically B2B2C companies, which is BAMTech Media and Sportsradar. Yeah, so unicorns in sports tech still are built by having some sort of consumer orientation. What else to say? We had 4 new entrants in this year in the Unicorn Club. So we had Keep, we had Whoop, we had Swift, and we had ClassPass joining that 3 club this year. What do we expect from this year or next year? We expect CureFit from India definitely joining that club, and we think that there is potential for quite some others. That should be it for this slide. Another interesting thing we like to look at is look at investments not only from raising funding, but also from an acquisition perspective. And there are a few things that I want to highlight here, some observations that we had. So there was one mega deal this year. It was Huya acquiring Douyu in China, which basically formed one giant e-commerce monster, not e-commerce, esports streaming monster. So this is a massive player now. And what you need to know is that Tencent is holding 2/3 of that company. So Tencent, already being the largest gaming company of the world by revenue, is holding 2/3 of that esports streaming giant. Very promising for them. Then what else is interesting? Flutter has raised 1 billion of investment from Fox Inc. this year. This is not on this slide because it wasn't an acquisition. There was a post-IPO investment, 1 billion. But why am I mentioning this here? Flutter last year acquired the Stars Group, and the Stars Group is basically, or last year, the 2 years before, acquired Sky Betting and Gaming. So Flutter Group now holds, amongst others, Sky Bet, Paddy Power, and Betfair. And you see where this is going. This is a betting giant. And with the US betting market getting legalized and Flutter getting another $1 billion of investment this year, it's fair to say that they're taking this sector very seriously. So we have seen esports amongst the acquisitions. We have seen betting as a topic in this acquisition chart. There's one more that I want to highlight, and it won't come as a surprise. It is going to be the fitness sector. What about the fitness sector? We have seen in 2020 Crescent acquisition acquire F45 training. We have seen Lululemon acquire the smart mirror called Mirror. Good name, huh? And a very interesting deal, MyFitnessPal, which was acquired 5 years ago by Under Armour, was sold by Under Armour to Francisco Partners for a discounted price. So they basically lost money with this acquisition. They bought it for 475 US 5 years ago. Now they sold it for 345. They say because it doesn't fit so well to the high performance orientation of the brand. Some others might say this area is not so hot anymore, or with Apple entering the space with Fitness Plus, the competition is really heavy there. That's my 2 cents on the acquisitions. Then this is going to be a quick chart. Let's talk quickly about IPOs over the last couple of years, since 2015 actually. Just 2 things I want to mention. Peloton, that's the elephant in the room. They had a really good year and made their investors happy, as you can see, over 300% increase since we looked at it last year, which was around the same time. So yeah, well done, riding the wave of connected at-home fitness. And then the only other thing I want to mention is that we had 2 more listings this year, which was DraftKings, yeah, betting theme again, and it was Fubo TV, which is actually also a very interesting case. Fubo got acquired by FaceBank, and yeah, they listed it this year, and yeah, let's see if they can bring it to unicorn status as well. Right now, being around 900 million US of market capital. Last slide for this chapter, the outstanding companies. We also think it's important to highlight the investors that invest in those outstanding companies, and also with this investment, making it possible that they become outstanding companies. So we wanted to know who are the top 15 investors over the period analyzed, so since 2015. And it's important to say how we did this. First of all, for this analysis, we only looked at deals that had a ticket size of 10 million US dollar or more. So we left out all the smaller deals, which made things a bit easier for us, but still helped to find who the interesting investors are. So only deals that are 10 million US dollar and plus. And we're also looking, we're only looking at the sports tech investments that these investors made according to our definition of sports tech. We're going to get to the framework in a few slides. So for example, let's start with the leader over the last couple of years. Sequoia Capital, they have made 16 sports tech deals, again, based on our definition and based on credible sources that we have found. That's important to highlight, since 2015. So obviously Sequoia Capital has done more deals in that time, but 16 in sports tech according to our framework. Cool. So they are the leading investor in sports tech since 2015. A few other things that are interesting on this slide. If you look at the headquarters of those companies, you see a lot of US investors. In fact, out of the top 15, there are only 2 investors, Tencent and Temasek, which are not from the US, and both of them are based in Asia. 2 last things I want to highlight: General Catalysts, because they seem to enjoy risks or taking risks, or maybe they're just good in seeing opportunities, because General Catalyst has done 5 of their 9 sports tech deals since 2015 in 2020. So the majority of their deals in sports tech has happened in a pandemic year. So yeah, big appreciation for that. I hope it's gonna pay off for them. The other interesting thing that I want to mention is that with Causeway Media Partners in our ranking on position number 4 and 10 deals since 2015, this is the only investor from this list where we would say they are actually specialists when it comes to sports related investment. And let that sink in. This is interesting, as at least we think so. So in this list, besides Causeway, there is no investor that actually thinks of itself as a sports specific one. So this means that Causeway is onto something, and yes, they have a strong media angle, but they're definitely specialists in sports. But it also means that there is room for other investors to come in and to be specific in sports, build out their USP there, and hopefully write some nice big checks there. That is chapter number 2. There is only one chapter left. I said it before, I also want to look a bit into investment dynamics. This is going to be a bit faster than the other 2, but still I brought 5 slides for you. Number 1, I said it before, we look at sports tech per our definition of sports tech. And we have developed this framework. Before I get into detail, I'm going to spend a few seconds on that. We have developed this framework in order to be able to communicate and speak about sports tech on a common base with the same wording. So this framework has been developed in 2017. We constantly work on it, improve it, hopefully, but this has been working well so far. So the green area is activity and performance. This is solutions for people who do sport, for the athletes. And again, going with the definition of Bill Bowerman, one of the founders of Nike, everybody who has a body is an athlete. So it's not only elite. Secondly, the area in magenta, this is for the consumer of sport. The fan in the stadium, the spectator in a bar, somebody looking at home on the go with the phone, the person who's betting, the person who is involved in some communities. This is for the consumer of sport. And third sector, the blue sector, is for, as we say, the sports executive, the person who is managing sports, for a person who is running a gym, managing a stadium, leading a sports club, and the likes. And for us, it's interesting to see where the money actually goes. And by looking at this chart, you see that within each block, we have subsectors, and we actually also have subsectors, but to make it easy and consumable, we did not list the subsectors on this slide. So what do we get out of here? We get out of this slide that fans and content got the most investment since 2015 with 8.4 billion, which is translated into 44% of the investment. But to tell you upfront, most of that investment was actually coming from a really strong time in 2015, 2016, when the betting giants, for example, collected lots of investment. So we see a little shift, but we're going to see that on the next slide. But yeah, just to finish there, fans and content, the news, the streaming subsector is a hot topic. Fantasy sports and betting is a hot topic. So this is where the investment is coming from. Looking at activity and performance, there, the second ranked sector, there, as you can tell, the meat is in the wearables and equipment subsector with 3.4 billion, and Peloton being one of the big examples, obviously there. But also the preparation subsector with, for example, ClassPass, being very strong with 3 billion. So this is the enablers of the sport. For example, if you book your classes, you find other people to do sports with. And like I said, ClassPass is a good example there. Last but not least, and typically the smallest sector, because most of it in there is B2B. And we said it before, the big money in sports tech is being made in B2C, is management and organization. And there we have, for example, esports companies like Discord. We have more content targeted companies like BAMTech, but still a very relevant sector. So not to be left behind, so to speak. Yeah, this should be it about this slide. And again, putting that on a timeline, because we think this is really interesting. So now we took the 3 sectors, and again, we're checking how much their contribution since 2015 was. And I think there is a very nice trend that you can see, which is the magenta parts are getting smaller and smaller, and the green parts are getting bigger and bigger. So that means fans and content, like I said, they had really good investment years in 15 and 16. They are collecting less and less investment compared to activity and performance. So activity and performance is since 2017 actually the leading sector in sports tech. So everything is going towards the end consumer, is about performance, is about health and being active, which is a very interesting trend to see. And another interesting trend to see is also that management and organization, no matter which year, with one exception in 2016, always stays somewhat stable. So the mostly B2B solutions, they're important every year to a certain extent, but they never show any tendency to be less important or to be more important. That should do it for this slide. Then we also were wondering, okay, so where from a sports perspective is the investment actually coming from? And you can already see there are 3 bars that are really high, and there are a few bars that are really low or kind of low. First, to put that into perspective, this analysis is not too easy to make. Why is that so? Because there are lots of companies who actually target many sports. For example, take the betting companies. You can bet on basketball and football, on tennis, on ice hockey, and I don't know, whatever. Horse riding, yeah, for example. So the question is are these companies, are there football companies, are there basketball companies, are there tennis companies? We say no, they're not, then none of them. They are actually multi-sport companies. And this is why on the right side, for example, you see the multi-sport bar being so high, because typically all the betting companies would sit in there. So what are actually, let's say, basketball or American football companies? We said these are companies that serve maximum 4 sports. So let's say, let's go for an example. Maybe there's one company that is specialized on football, aka soccer, and basketball. Then we would count the investment in that company for both football/soccer and and basketball. So we would divide the investment by the amount of sports that they are targeting. As said, we said, hey, maximum 4 sports should be targeted. If a company targets 5 or more sports, that is a multi-sport company. Yeah. So we try to make it as fair as possible. Yes, there are still some weaknesses here and there, but we wanted to have an indication of where the money is going. And the trend is pretty clear, right? I mean, fitness and workout is clearly the winner here, but as you can also see, closely followed by esports. So fitness and workout and esports are the big drivers of sports tech since 2015. And let's say the more traditional sports, team sports, like football, like basketball, like American football, they are typically lower in investment. All right, then we have, we needed to look at ticket sizes. We wanted to know which are the typical deal sizes in sports tech and where can we observe some interesting developments. So if you look at this slide, you see different bars with different ticket size boxes. The left one being all deals below 1 million. Next one is all deals below between 1 million and 10 million, and so on and so on. First of all, we have seen a lot of undisclosed deals, so where we don't know what the actual investment amount is, which is nothing untypical. In many deals, the involved parties just don't want to disclose what actually happened there. So that is one thing to highlight. And then the second one is that 67% of all deals and 90% of all disclosed deals are below 1 million. Yeah, again, maybe the second part is even more interesting. Amongst all disclosed deals, so where we know the investment amount, it's 90% that are below 1 million. So to put it in easy word, a lot of deals in the below 1 million euro bracket. and also quite many deals in the bracket up until 10 million. And then you can observe something really interesting. There is a big gap between the bracket that I just mentioned, everything up until 10 million, and then 10 million onwards. And this, I believe, or we believe, is something that probably the sports tech world or the investment world should work on, because there clearly seems to be a need for ticket sizes of 10 million plus. So in the journey of a startup, of a company, there seems to be a critical point where they might not be able to collect follow-on investment. But the good news is, once a company has reached that bracket of 10 million plus deals, then the next couple investment rounds seem to be kind of likely. And interestingly, from the bracket 25 to 50 to 50 plus, we see even more deals. So once you have reached a certain point, the willingness of the investors to put in more money to get follow-on investment seems to be there, which is good news. One last slide from those 3 chapters. We wanted to look at the business model of those startups. And with business model, the only thing we mean is that a B2B or a B2C startup? And keep in mind, like we said on one slide, the unicorns in sports tech are mostly B2C companies. And we actually see that reflected in what we have on this slide. On the left side, we see the number of startups. So independent from any investment amount, just the amount of startups who either go for a B2C or a B2B business model. And 76% of the startups in sports tech go for a B2C business model, and the number went up compared to last year's report. And even more extreme, if you look at the right side, the amount invested in sports tech is 81.54% in B2C business models. This is a strong and clear signal, and that number went up even more compared to last year by over 5%. So over 80% of the investment in sports tech goes into B2C companies, which is understandable if you see the success of B2C oriented companies. Ladies and gentlemen, this was my take, or our take, on sports tech from an investment perspective. 3 chapters, 5 slides each, and here is one last slide with some of the key insights, which is hard to put on a slide, but this is our selection. So to sum it up again, let's go row by row. 19.2 billion euro, not euro, US dollar, was invested in sports tech since 2015. And the year is not done yet. We had a record high ticket size, average ticket size in 2020 in a pandemic year of 11.1 US dollar. Really cool. So sign of a hopefully maturing market. Second row, let's look a bit more into geographies. The US is clearly the global leader when it comes to funding, accounting for more than 60% of global funding in 2020 in a very insecure year. The top cities by funding are clearly dominated or influenced by Asia, and to be more precise, by China. So 3 out of the top 5 cities by funding are from China. Last row, speaking about which topics or themes or sports are the most interesting ones. Fans and content is still the leading sector, with 44% of funding since 2015. But we have seen a shift more towards activity and performance. So the fitness, performance, activity part of things, which is also connected to the last point that I want to make again. Fitness and workout is the #1 sport in sports tech, with around 4.6 billion in investment. This is it from my side. I hope you got some good insights out of this presentation. As said, the entire report with lots of things written in it as well. Even more chart can be downloaded on our website, sportstechx.com. But for now, I want to thank you for listening. I want to thank Nigel and his team for inviting me. And now my monologue is over.